Sandeep was reading a newspaper. Just then, Champak came and asked Sandeep that he has never told about DMart. Champak recently went to a DMart store and he also read about the owners of DMart buying flats for 1238 crore rupees. Sandeep said that he was thinking about discussing Avenue Supermarts, the company that runs DMart. Recently, its quarterly results have also been reported.
The story of its promoter, Radhakishan Damani, is also very interesting. Damani is among the top 10 richest people in the country. But first, let's talk about the business of the company.
Avenue Supermarts Limited opened its first outlet in Mumbai, Powai in 2002. After that, the company continued to grow and right now it has 302 stores spread across 18 cities. You can consider DMart as a huge Kirana store. Just like Kirana shops, they are opened on their own land. They work on large sales volumes and low margins. However, this strategy is effective in beating the competition. During the December quarter, the consolidated post-tax profit of Avenue Supermarts increased by 6.6% to reach 590 crore rupees. During this period, the income went up by 25.5% to reach 11,596 crore rupees. Sandeep started telling a story about the company's promoter R.K. Damani. When he started this business, a lot of people criticized him for entering into the Kirana business. But R.K. Damani made it such a successful business model that everyone is trying to follow it. Champak found it very interesting because many companies in the retail sector failed. The story of future retail is known to everyone. So, he was intrigued about why DMart is a success story. Sandeep explained that no one can give better discounts to customers than DMart. Generally, rental cost accounts for 3% of the retailer's turnover. Even efficient retailers are able to make only 3 to 4% margins. So, it's very difficult to control cost in such cases. However, DMart works with very high EBITDA margins. In fact, the company owns the land on which it operates the retail store. This saves the rental cost. The cost of buying the land is also paid in due time. Now Champak wanted to know about its share performance and outlook. Sandeep said that in the last 5 years, its share has gone up by 200%. However, last year, the share witnessed high volatility. Its 52-week low is 3,186 rupees and its current price is 3,483 rupees. Its 52-week high is 4,609 rupees. Right now, valuations of share are attractive as it is 24% below its 52-week high.
We believe DMart has been facing some challenges in the very near term because of rising inflation, and that is the reason Q3 numbers were below market expectations. But my sense is that as soon as inflation cools off, FY24 is going to be a much stronger year, and obviously, with the increased penetration of the overall geographical presence of DMart, will ensure that the company's business model of high volume and low margin will continue to generate good sustained profitability for the company. But yes, this is a stock where you have to take a 2 to 3 year kind of time frame. In the very near term, there could be some challenges for a couple of quarters.
Champak agreed that the share has given good return in the past, but he wanted to know about the future outlook of the company, share, and the risk associated with the business. Sandeep started explaining about the retail industry situation of India. In 2020, it was 66 lakh crore rupees. Grocery accounts for 60% share in it. In the total grocery market, the share of organized retail market is 4 to 5%. In this organized market, DMart has 15% share. In per person retail expenditure, states like Maharashtra, Tamil Nadu, Karnataka and Gujarat top the list. Hence, it's no surprise that 65% of DMart stores are in these 4 states. Looking at the business size, high capability of implementation, effective capital allocation, and long term vision, we can say that the company has good prospects. These can be considered as major growth drivers of the company. In the last 4 years, DMart has opened 113 new stores. Strong and debt-free balance sheet coupled with strong operational competency can improve the business of DMart. The increase in the number of stores and high sales figure can lead to growth in revenues. Besides this, inflation is expected to come down and consumers are expected to amp up discretionary spending. This will lead to improvements in the margins.
Now let us look at the risks for the company. A huge chunk of its sales is concentrated in cities like Mumbai, Pune, Bangalore, Hyderabad, Ahmedabad, etc. Post-COVID, the business is back to normal, but the general merchandise and apparel business segment of DMart is performing poorly than other segments. It contributed 28.3% in total sales during 2019, but in the first half of FY23, it has fallen to 24.75%.
See, as I told you earlier, that apparel business has been hit because of the rising inflation trajectory in the last 3 to 6 months. Our sense is that inflation will continue to remain elevated at least for the next 2 to 3 months. Post April, our sense is that inflation will start cooling off, and that will benefit the volume growth for DMart. So we are pretty confident that FY24 April onwards we could see higher growth in the apparel segment, which incidentally is one of the most profitable segments for DMart compared to the other general merchandise.
It seems due to high inflation, the general merchandise and apparel business is unable to fully recover. This category includes items pertaining to bed and bath, shoes, slippers, apparel, crockery, home appliances and plastic goods. This business has a very high operating margin. EBITDA margin in this can even breach 20%. Now, the economy is reviving, footfalls are improving, so the number of people going to the retail stores is also increasing. So it seems that this will benefit DMart. The company is also looking to add pharmacy shops. Profitmart Securities expects the general merchandise and apparel segment will revive very soon, as FMCG companies are passing on the benefits of low input costs to customers. Due to all of this, experts are recommending buying this share. Now, Champak wanted to know about its valuation and target. So Sandeep explained him that the market price of DMart is around 3,495 rupees. It is trading at a PE multiple of 74 times on expected 1 year forward EPS.
I think you must understand that the reason the price earning multiple for DMart is extremely high is because the market is looking at a very big opportunity in terms of growth in number of outlets for DMart, and secondly the overall retail opportunity in our country. Retail business is growing by at least 20%, and our sense is that DMart, which has got about 300 outlets, could easily see a doubling or maybe tripling of their outlets in the next 5 years. More importantly, recently DMart has said that they will be coming into the pharmacy business by using their existing retail outlets. So that is also going to be a very big opportunity. So technically speaking, market is not going to look at the P number. They are going to look at the earnings growth and obviously the opportunity size to grow. But yes, in the very near term, price earning multiples could stabilize between say 65 to 70 times, which I think is a very normal number for DMart considering the kind of huge scalable growth opportunity available for the company.
The RBI is continuously trying to control inflation. Recently, RBI has increased the repo rate again. This is expected to bring down inflation, which will benefit consumers, and that can help in increasing overall demand. Overall, we can say that in the coming times, retail stores like DMart can perform well.